All right, guys. Well, let me know what the sound is like. Um, yeah, we should be good here. Let me know what the sound and quality is like. What's up, Veteran Breaks? Around 600 shares. Let's see when the earnings are supposed to come out. Technology stocks are down. All right. I don't know. That song kind of sounds like there's two songs playing in the background. Let me know if you can hear the music. You should be able to. No, it's the same mic. Same mic we always use. Let me know how the volume's like. Did Space drop results yet? All right, no, it's the same mic. What's up, Robert? What's up, BKM? What's up, Sam? What's up, Chris? Good morning, or good afternoon, I guess I should say, no? Looking up the numbers now for Space. They posted a loss per share of 31 cents. All right, so here's the results. The 2021 financial highlights are as follows. Cash position remains strong with cash equivalents, and marketable securities of approximately $931 million as of December 31st. This does not reflect our recent fundraiser. They said they have GAAP selling and general and administrative expenses of $40 million compared to $33 million in the fourth quarter of 2020. They had non-GAAP selling, general, and administrative expenses of $29 million in the fourth quarter of 2021. Did their numbers just drop? It looks like they did. Did Space numbers just drop? What's up, Pawn? I got too much stuff running in the background right now. See, it's weird. I'm not getting any actual hard numbers here from these. Look at Space Rip. So something had to just come out. All right, so that expected revenue was 36 cents a share. We're still waiting for the actual numbers to drop. All right, we're ripping up. Let me know what the volume's like. All right, so here's the fourth quarter 2021 highlights. All right, we're still looking up these numbers. All right, we're about to put all the trailing numbers at the bottom. All right, we got one more piece of. All right, so we're going to put the entire scroller at the bottom here for these results. All right, so here is all of these numbers combined, scrolling at the bottom. The scroller at the bottom. We're still waiting for the actual little bit hard data to come out here. Space is up there. Still waiting on the earnings call to drop. Y'all hit the like button if you can. So yeah, let's put a different chart up here so we can catch both. And catch like maybe a 30-minute chart. Space is popping up though. I'm checking the Zynga Pro. We have the numbers scrolling across the bottom, and space is popping up, guys. Are you bullish or bearish on space? Let me know. Let me do a poll here. Let me know if you're a bull and bear in chat. We're going to get the poll going too. DraftKings came through. Thanks, John. Hey, you're welcome, bro. I'm telling you, dude, nobody ever listens to me, bro. Nobody ever listens. Everybody always talks smack because I trade small. But y'all know. I told you guys DraftKings this morning. I'm not even trying to be like, hey, look at my picks. But like, hey, look at my picks, bro. Was absolutely 100% correct on it. Called the bounce, called the big rip. Even told you guys it might run up to $18 or $19. That was my price target. So, I mean, hey. What's up, Chris? Oh, no. But the problem with having too many monitors, let me tell you what the problem is of having too many monitors. The problem of having too many monitors is that I have too many windows that I don't know which one I'm currently at that I need. You know? Hey. Yeah. Hey, thank you for the acknowledgement, Hammer. I appreciate you, bro. What's Bitcoin doing right now? Get rid of that. And then, yeah, look at space, though, man. Space is ripping. Bitcoin is actually up today. That's nice. It's up to 38K. What other big earnings coming out today? I don't think there's many big earnings today. Tomorrow is when the big earnings are coming. But did I not call DraftKings this morning, man? And again, I could tell you guys why it worked. Like, why it worked is simple, okay? When you have, I want you guys, if you want to know how to make money in the stock market, like, screw day trading. If you want to talk about just generally making money in stocks, understand what I'm doing here with stuff like DraftKings. Like, pay attention to it because it works. It's very simple. You look for healthy companies that you know and that you understand, like DraftKings for me, like MGM, gambling stocks. Let me have them. I know gambling. I'm not telling you should gamble, but I love poker. And I throw a few money. I throw like $20 on a game every now and then, but it's definitely not something I do regularly. I usually don't bet on the games, but I have used DraftKings specifically for MMA, fantasy sports, and also football a little bit too. So I've played their fantasy football and their UFC DraftKings as well. So we've used both of them, and they're a healthy company. They've had a lot of partnerships over the last year. They partnered with MLB, they partnered with the UFC, they partnered with a lot of people. They've done a lot of marketing and advertising, and I think generally they're going to be fine. I think they are the number one fantasy betting platform in the world, and I think with that they're not going to fail. At least it's unlikely that they'll fail. And so with that, waiting for them to just get beat up in the market, get really large extended dips down, and buying those dips and just holding for a rebound, very profitable. Just establish a risk level and stick to the risk level. That's the number one thing you need to do if you're going to trade like that, is establish a risk level. Figure out where you're uncomfortable with losing. And if you're uncomfortable with losing there, make it your risk level and stick to it. If you do not stick to it, you will lose. And so there's always other trades. Just stick to your risk level, and you can always jump back in it. But it's a very simple strategy. Yep. Vote on the poll right now, bullish or bearish on Virgin Galactic, and we're going to be listening to the entire call, the entire space. We're going to be listening to the entire space earnings call. It starts pretty soon, so stick around. We're going to listen to it all. Hey, thank you, Joshua. I appreciate you, bro. Yeah, and I mean, I don't know if you guys remember, I've gotten into a few of these plays over the last 6 months. We did it with Roblox and made money. Or no, we didn't make money on Roblox. We did it with, what did we do it on? We did it with AMC. We did it with DraftKings before on another big dip. We did it on, I did it on a few different examples. We lost on Facebook. We tried to do the same thing on Facebook. No, we made money. Did we make money on the Facebook? I know we did it recently. I did it with call options as well, where I bought a call option on, what did I buy the call? I did it with call options too. Same concept, same strategy, except with call options, you got a time frame and there's a little bit more nuance to it, but same strategy, very profitable. Just wait for beat up companies. I'm a bottom feeder when it comes to investing and swing trading. I just wait for beat up companies that are healthy, that I think are going to be okay. And I buy the dip and I ride the bounce and I take profit pretty quickly, and then I let the rest ride in order to protect my trade. And very simple. At 4:45. 4:45 is when it starts. All right, so we're still looking for the space numbers. I think the space numbers just dropped here, guys. I think the space numbers just dropped. Okay, we do have numbers here from space. We do have numbers. I'm going to post these in chat right now. We do have the numbers dropping. So the space earnings are right now. We're going to put them in chat right now. This is them right here. So it looks like they were down. We're going to try to get this into a better list. They saw first quarter free cash flow loss of 85 to 75 million. They saw fourth quarter EPS of 31-cent loss, beat the 34-cent loss estimate. Sales of 141K, missed the 330K estimate. And so not good. Not good. All right, we're going to drop all of these numbers. They're out right now. EPS. All right, so we got the numbers right here on the screen. And we're going to post these. Beat by 4 cents. Put in revenue of 0.014 million, missed by 0.3 million estimates. And then we got the 4 million cash flow. All right, so here's the full numbers. We're going to be scrolling at the bottom of the chat. These are the full numbers. Loss of 31 cents per share fourth quarter EPS, beat the 34-cent per share estimate. And again, EPS is a gauge on how profitable the company is. Sales of 141,000, missed the 330,000 estimate. First quarter free cash flow loss of 85 to 75 million. They saw GAAP EPS of minus 31 cents, beat by 4 cents. Revenue of 0.14 million, missed by 0.3 million. First quarter free cash flow loss of 85 to 75 million. So pretty rough numbers. So yeah, I have 9 cents, 8 long strangle. Hey, good luck, Alex. All right, so we'll see what happens. The earnings call is not going to start until 15 minutes, so we'll be waiting here. Starts in 15. Hey, well, good luck. Vote on the poll right now, too. Bullish or bearish? 64 votes. Bullish or bearish on space. 64% bull, 35% bear. Space is at 8/10. Yeah, for sure, Alex. Good luck. 9 cent AP. Long strangle. Yeah, good luck, brother. You got this. 1 minute, 5 minute charts. And we got 30 minute, and then we got 1 minute. I mean, I guess we could look at a 5 minute chart if you prefer. But yeah, we'll see. We obviously had some craziness today with DWAC. What did DWAC end up doing today, man? I have to check it out now. DWAC at 93s. Didn't hold. INDO is kind of crazy today. So INDO ripped is at 650 right now. So we're kind of looking at that. All right, guys. So yeah, the call starts in about 15 minutes. Oh, Levy got a bump. DWC. Yeah, we'll see. All right, guys. So we do have the space numbers. So I'm kind of looking up some stuff. So guys, how easy it is to create an NFT. I've looked up the steps online, but how easy it is to create an NFT. Do you think space is going to run from its current levels? I think if we're looking at important levels here, I think $8 is big. I think $8, really big psychological level. If we put up the previous closing price here, for instance, I think we got to... Eight tens. But yeah, $8 is a big support level. What else do we have here? We got some stuff from the previous day. I mean, I don't know, man. I think space is just beat up over the last week. And so it's kind of one of those things where, we can kind of use the same logic we had with the DraftKings play, which is like, okay, healthy company has been beat up a lot. But the problem is like, okay, is it a healthy company? And again, you guys answer that. Do you think space is healthy? Do you think space is healthy long term? And what's the vulnerability look like in this instance for space? Let me know in chat. It's a tough question. It really is for space, because the space industry in general is pretty vulnerable and expensive and difficult. It's a unrelenting environment, space. And so with that, it's a very difficult environment to, do anything with. Very difficult environment to make money in, especially. And SpaceX, we'll see what happens with them. I know there's rumors of a SpaceX IPO, but again, let me know what you think in chat. Not healthy. I ever heard some other creators that made one for those that are tech savvy. It seemed fairly simple. One guy's even made a few hundred off of his so far. That's cool. Yeah, oil's been crazy today too, man. Haven't done enough research, honestly. I'm leaning towards not healthy. I mean, we'll see, bro. It depends. I don't know. SpaceX will not go with a SPAC. I know there's been a talk of ISOF has been the talk. But I mean, if we look at space, it's been beat up over the last year. We look at the 4-year chart. It's a little bit less beat up, but it's still pretty beat up, in all honesty. And so the question is, what do you guys think long term? Short term, always going to have volatility. We just got to pop up to 825s right now. So space is kind of running a little bit on the news, even though the news was a little rough. We'll see. He will do a direct offering. Hey, what's up, Tiny? SpaceX will not go with a SPAC. Yeah, what's up, Tanvir? It's gonna be in 10 minutes. Chia, it's gonna be in 10 minutes, bro. So it's gonna be at and I have the event list here. It's gonna be in 9 minutes. And so here's the actual Space Galactic earnings call. We're gonna be listening to it live on the stream. Again, just let me know what the sound is like. Vote on the poll right now. Yeah, Ocugen, man. What happened to Ocugen today? I left the market, but the SPY tanked. It was kind of a volatile market, but the SPY tanked and then rebounded. OCGN filled the entire gap on the way down, man. And it was healthy all this morning. What happened with Ocugen? Did it have earnings that dropped? Something tanked it in after hours. So they have no shame. OCG and dilution into a reverse split. My understanding is Richard Brunson is a bit of a nut, but most super smart people are. Yeah, for sure. And it's one of those things like Einstein's crazy, and I get that. But it's not really Richard. It's more so just the environment of space that is difficult to succeed in. Now, I know this is like a little bit different in terms of what space does. It's like a mix between a spaceship and an airplane. And it looks dope. And maybe I think there's a lot of monetization capabilities for stuff like that in terms of like speed of destination arrival. There's a lot of good possibilities, but space is inherently risky and expensive. So I think those are the two dynamics in play here with space, and we'll see what happens. We're at 820s, holding fairly well, moving up on these earnings releases, and you can see the full list of earnings at the bottom here. What other earnings are today? Joey cracked the market. Have no shame, OCD and dilution. We'll see. Are you buying the dip? Vote on for space. Is Smile Direct Club earnings today? Is it really? No. When are they supposed to drop earnings? Oh, SDC is going to be in about a week and a half. That's when their earnings drop. In about a week and a half on March 1st. Or a week and a day. Oh, Ocugen offered. Oh, damn, dude. Ocugen hit people with an offering, bro. Did they really, dude? Dude, that's nasty, bro. That's shady, dude. Oh, man. That's what happened. And this is the risk, man. And this is what people don't understand. Is that Ocugen is not a profitable company. And so what do you do when you're not profitable and you're the CEO of a not profitable company? You sell shares and you cash out. And I'm not saying that's what Ocugen is doing, but for them to pump the stock up all day today, and for the stock to go from 350 all the way to 450s plus, up over 20%, for them to do that and then slam an offering as soon as after hour ticks closed, the market open, that's incredibly shady, and just tanking the stock. Everybody that all this movement, all the people that invested in Ocugen lost 20% plus from this, and unless you're holding it long term, which is probably not going to be a good idea, you just lost 20% on Ocugen selling shares, so it's kind of what happens in the penny stock market. But they went from 21 cents to the moon. Yeah, but that's if you got in 2 years ago. Who's going to hold this for 2 years? Not many people. I mean, most people lost money on this, I think. It's just the problem with penny stocks is that most of them fail, unfortunately. Yeah. T-Doc. Yeah, I know Teledoc's reporting, but it's just not a big enough company for me to market. The only reason I'm doing space is because space is kind of like an underground following of people. Teladoc might, but it's going to be noticeably smaller than Spaces. You know. The CFO and the CEO sold when it went up to 18 a few months back on the WHO. Interesting. This isn't the first time Oxygen did this to shareholders. Yeah, I mean, I would never hold this one. Like I said, I don't hold anything overnight that's a penny stock. Never. You know, I'm just, if it's a lot, and what I mean, like, Space isn't a penny stock. I'm talking about like real penny stocks that, you know, that mostly hover under $10 consistently. Space has just had a rough 6 months. And Space is adding up. It's at 820s right now. Again, let me know what you like. We got the call coming in 4 minutes. The call starts 4 minutes. So let me post this here. All right. Yeah, the earnings call is gonna be in 4 minutes, 2 minutes, 3 minutes, whatever it is. Yeah, 3 minutes. Hey, what's up, Heal Me, John? They made a couple bucks. How you watch SQ, man? It's been a while since I've looked at SQ. What happened to SQ, man? I haven't seen this stock. Is it still expensive? Yeah, kind of. Square is always going to be valuable based off of just the utility of it, I think. Space too nichey. Why are you live? Well, we're streaming the earnings call. We stream the earnings call every day. I mean, every major earnings call we stream. You know, I mean, we don't have too many people here today, but I mean, if over 100 people is too small, then you're not doing bad, I would say. You know. OSTK, Overstock.com. Yeah, they had earnings this morning, right? Yeah, Overstock.com. Didn't they have earnings this morning, or did it get pushed to afternoon for Overstock? I thought they had earnings this morning. Okay, the conference calls tomorrow at 8:30 in the morning is what it is. So yeah, Overstock is volatile based off of earnings that are dropping tomorrow morning at 8:30 market time. The big one for tomorrow that we're going to be watching, man, let me see my earnings list. I know we have one that's tomorrow. What's the big one tomorrow? Even with it, I don't know how big it's going to be. All right, so we're supposed to start in about 5 minutes. They're in about 50 seconds. Lowe's, Fubo, yeah. Lowe's is what it is, I'm pretty sure. It's relative to the market cap is what it is. So like LOW is Lowe's. Lowe's has got a market cap. Oh, damn. The conference call is scheduled for 9 a.m. tomorrow. So, but yeah, Lowe's has a market cap of 152 billion. So, all right, guys, here's the space call. Let's hear it. Let's see what happens. We're going to turn the music down once the call starts. All right, so we're still on hold here. Ooh, they gave me slides for this one. This is kind of dope. Still on hold. They gave me slides for this. Look at this. That's cool. Lowe's. Yeah, what's the other one? Skills tomorrow. I know Playmaker gave me a list. So I appreciate that play. Yeah, tomorrow is Skills, Fubo, eBay. In terms of market capitalization, are we live? Nope, still not live. In terms of market capitalization, what's eBay in terms? We're going to be covering Lowe's in the morning. eBay is going to be tomorrow. eBay's got 36 million market cap, so we might stream that one. It depends on which one's the biggest one. What's SKLZ? Who do you think has a bigger following, SKLZ or Lowe's? We can kind of do both of them. Well, it's definitely Lowe's. There's definitely eBay over Lowe's, but all right, guys, we're waiting for this earnings call. It should be live pretty soon. We're just waiting on the call to start. I guess we're gonna start at 4. Etsy and Wayfair. Well, yeah, the Lowe's. I guess with the earnings call, I guess it's supposed to be at 4. So I guess we're just waiting until 4. REVB is ripping up. Let me look at it real quick. Yeah, it's pushing up some. We'll definitely cover this one tomorrow. So hit the subscribe button. We might trade this one tomorrow live. You know, we day trade the market, swing trade, invest live every single day. So hit the subscribe button if you haven't already. Hit the notification bell. I do see REVB pushing up though. Does it give me a time of when this starts? No, they don't say the time on there. Still waiting. Overstock.com is kind of consolidating around the previous closing price. Jack in the Box is tomorrow. Yeah, there's some in the morning though. Tomorrow we got Lowe's, Overstock, Jack in the Box. What's the market cap of Jack in the Box? I'm curious, to be honest. Not even for our earnings. I doubt I'll stream the Jack in the Box earnings. The market cap of Jack in the Box is almost $2 billion. So not huge, not crazy big or anything. You know, to put into perspective, Nvidia had 660 billion in market cap. Apple had something relevant too. Apple almost has $1 trillion, I think, right? And then Space has a very small cap, but it's got an underground following. Yeah, Apple actually has almost $3 trillion. Dude, I know we got some food here. I kind of want to go eat real quick. I got a seafood platter with shrimp, fish. I'm about to eat it. Waiting on the call, guys. Waiting on the call. Call starts in 11 minutes. Jack in the Box is okay. Jack in the Box, what it has going for it is a lot of assortment. So you got a lot of stuff at Jack in the Box. You got breakfast food you can get all day. You got burgers. You got fries. You got churros. They got a bunch of stuff, man. But none of it's that good. You know, their tacos are good. They're like 50-cent tacos, and you can get like 12 of them for $6 and just eat a bunch of tacos. That's what I get. But it's fast food. It's junk food, you know. All right. But yeah, let me know what earnings in the chat that you're liking the most tomorrow that you want to see me cover in the evening. So which one do you think I should cover in the evening for tomorrow? Tomorrow is Wednesday. After close, we've got Fubo, Skills, Hertz, Clover. What is Clover? Wish? Or no, Clover is CLOV, right? Man, it's been a minute since I've seen Clover. Is that CLOV? Yeah, Clover Health. Or is it a different Clover? But no, there's Fubo, Skills, Hertz, Clover, eBay, Lemonade, Magnite, Booking, Holdings, Fulgent, and I don't know. I don't know how to pronounce this. Amadeus. Amadeus. I don't know how to pronounce that. But which one do you think is the most relevant? I know the big one that we're going to be covering this week, more than any of these, the big one is Coinbase, Thursday evening. That one will be interesting. Friday, we also have pre-market. We have OCG and pre-market Friday dropping earnings. So we'll see. It'll be interesting regardless. Go eat, be back for the call. Nah, I mean, I might eat here. I might eat in front of you. Molson is also tomorrow. Still waiting on the call. Call starts pretty soon. Should I put this up? All right, I'll be right back, guys. Be right back. All right, we got some food. Tupperware. All right. Oof. This looks good, man. Thoughts on coin options? I think buying options pre-earnings is very, very risky. Sometimes a stock can have great earnings and fail. Sometimes a stock can have terrible earnings and go up. And so betting on any earnings play is usually incredibly risky because there's no guarantee. And even if you're right about the direction, it doesn't guarantee it's going to move your way. It's like a coin flip. And so I definitely don't do it myself. I don't know if I certainly don't recommend it, but do what you need to do. You know, maybe if you can make money with it, so be it, but I can't. Got catfish, shrimp, fries. I don't know what that is. Fried okra? I hope that is. Right, exactly, EH. Your EHA. A strangle, kind of taking both sides and options, is usually an okay move. Still waiting on hold. Yeah, I got wrecked with NVIDIA. Yeah, NVIDIA was tough, man. Very difficult. Crazy ID. Wait, Alibaba's Thursday? Is it really? When? Oh, it is. Baba's Thursday morning. That'll be an interesting one. We'll definitely cover that one too. Huge company. What's the Baba cat? Baba is 340 billion, so a huge cap. I also see some other stuff moving right now, like HRTX ripped and then came back down. Still on hold, waiting. All right, well, that'll be interesting, you know, what the BABA earnings will do. Yeah, Chris says, so many things can go wrong with earnings. Plays it literally a lotto whenever you put in be okay with lighting a fire. Yeah, exactly. Like if you're going to play earnings, just understand there's volatility. You're probably going to experience volatility. And so if you're into gambling, a lot of people do earnings because they're kind of into gambling. It's kind of like an excitement or rush. Oh, if it goes in your direction. The problem is that it's very risky, and it's incredibly risky. And a lot of traders lose money doing it. A lot of new traders get involved with stocks, and their logic is like, okay, I'm just going to wait for a stock to have good earnings and then buy that stock. You know, I wish it was that easy. Everybody does, but it's not, because a stock can have great earnings and fail and crash that day right after the good earnings. The stock can have bad earnings and run up. And so you never really know. Just trade small if you're going to trade it and you want to play it. Usually my best advice is just to take it slow, trade small. Don't force crazy positions in risky trades. It might feel good at first, but eventually you're just going to get frustrated and lose a bunch of money. Yeah, if you're trading strangles, that's a different story. That's basically embracing the volatility. So that's fine. But I'm talking about like picking a direction one way or the other, usually very risky. Yeah, you can take both sides. That's fine. Taking both sides is reasonable, I think, and understandable. Because as long as you get a volatile move, that's a little bit more nuanced than just taking one direction. If you take just one side, it's just it's a coin flip. It's a gamble. This food's pretty good. What's up, Leaf? All right, so the earnings call is probably going to start pretty soon. All right, we got about a minute left. 1 minute. And we'll play the whole thing. Can y'all hear it? Can y'all hear everything good? Like the sound is good? Let me know what the sound is like. If the sound is good on your end, great. If not, we can try to adjust it a little bit. Let me know what the sound is like once I start it, and we'll fix it to adjust to whatever you want. All right, we should be starting pretty soon, within the next minute or two, no matter what. It should start in 20 seconds, but I've been doing these a lot lately, and generally, if they're late, it's by like 30 seconds. All right, here we go. Still waiting. Should be starting right now. All right, still sitting here waiting for the earnings call. No start yet. It is now 5 o'clock. 5 o'clock. I'm just here for the shrimp. It's fried shrimp. I like boiled shrimp too. I mean, I'm a Louisiana native, so I love boiled shrimp too. Specifically seasoned boiled shrimp. But I can get down with some fried shrimp too. You know? All right. Still waiting. Looks like they're about a minute or so late. It might start like a minute later exactly.
My name is Bethany, and I will be your conference operator today.
There we go. Let me know how you can hear.
I would like to welcome everyone to the Virgin Galactic fourth quarter and full year 2021 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time,
sound check.
Simply press
sound good?
star
Can y'all hear it
followed by
clearly?
1 on your
Good and
telephone
clear?
keypad.
Let me know.
If you would like to withdraw your question, please press star followed by 2. Hosting today's conference call will be Liz Calvillo of Investor Relations. As a reminder, today's call is being recorded. I would now like to turn the conference call over to Ms. Calvillo. Please go ahead.
Thank you, and good afternoon, everyone. Welcome to Virgin Galactic's fourth quarter and full year 2021 earnings conference call. On the call with me today are Michael Cole-Glazier, Chief Executive Officer, and Doug Ahrens, Chief Financial Officer. Following prepared remarks from Michael and Doug, we will open the call for questions. Our press release was issued about an hour ago and is available on our investor relations website, as well as a slide presentation that will accompany today's remarks. Let me refer you to slide 2 of the presentation, which contains our safe harbor disclaimer. During today's call, we may make certain forward-looking statements. These statements are based on current expectations and assumptions, and as a result are subject to risks and uncertainties. Many factors could cause actual events to differ materially from the forward-looking statements made on this call. For more information about these risks and uncertainties, please refer to the risk factors in the company's filings with the Securities and Exchange Commission, filed by Virgin Galactic from time to time. Readers are cautioned not to put any undue reliance on forward-looking statements, and the company specifically disclaims any obligation to update the forward-looking statements that may be discussed during this call. Please also note that we will refer to certain non-GAAP financial information on today's call. You can find reconciliations of the non-GAAP financial measures for the most comparable GAAP measures in our earnings press release. With that, I would now like to turn the call over to Michael.
Thanks, Liz. Good afternoon, everyone. Before we start today's presentation, I'd like to acknowledge the service and support of our first chairperson, Chamath Palihapitiya. As announced last week, Chamath has stepped down as our chair and board member to focus on other public company board commitments. We've known the time would come when Chamath would move on to new initiatives, and I'm very pleased that long-term board member Evan Lovell, who is the Chief Investment Officer of the Virgin Group, has agreed to serve as interim chair until the permanent chair has been named.
Bull or bear?
Spencer Stewart has been retained to lead the search for a permanent chairperson. They've already begun the process. I'd like to thank Chamath for his vision and groundbreaking work in transitioning Virgin Galactic to a public company, and also thank him for the support and insight that he's provided me over the past 2 years. Evan's deep experience with the company is a tremendous asset, and I'm excited to continue our excellent partnership as he steps into the interim chair role. Turning to slide 4. 2021 was an incredibly important year for Virgin Galactic that laid an essential foundation towards becoming a scaled commercial operation. I'd like to call out a few highlights. We received approval from the FAA for our full commercial launch license, marking the first time that the agency licensed a company to fly customers to space. We successfully completed 2 crewed space flights that demonstrated the value of our product and our unique customer experience. The enormous media and consumer response to these flights reinforced our belief that demand for space travel will outstrip supply for the foreseeable future. We began enhancements to our current vehicles to ready them for commercial service, and we initiated the design work on the next generation of our spaceflight system that will become the backbone of our future fleet. Today, our focus is on scaling our business in a methodical way. With regard to our current ships and near-term schedules, we remain on track and on schedule to launch commercial operations in the fourth quarter. Our vehicle enhancement program is progressing well and is expected to be completed in the third quarter. And we've opened ticket sales to the general public and expect to have our first 1,000 future astronauts signed up by the time we launch commercial service. With regards to our future fleet and medium-term business plan, we've adjusted our design and manufacturing strategy to have our internal resources primarily focused on engineering, R&D, final assembly, and test. We will then leverage partnerships within the aerospace ecosystem to develop our major subassemblies. We are putting into place the internal and supply chain infrastructure that will allow us to build our vehicles with high quality in a cost and time efficient fashion. We've built out our senior leadership team, and we are continuing to attract and develop outstanding talent at all levels of the organization. All of these steps affirm confidence in our business model and our ability to generate attractive flight economics. Doug will share more detail about this later during the call. Turning to slide 5 and today's agenda, I'll start with an update on the readiness of our current fleet, and then turn to our commercial plans, followed by an update on the manufacturing strategy for our future fleet. I'll then turn the call over to Doug, who will provide a financial update and some detail about our long-term economic model. Moving to slide 6 on our vehicle enhancement program. As I mentioned, we remain on track and on schedule to commence commercial service later this year. We are making excellent progress on the enhancements to our mothership Eve and our spaceship Unity. As we discussed last quarter, these modifications will meaningfully improve the durability, reliability, and predictability of these current ships and enable a higher frequency flight rate for commercial service. As we shared last quarter, Eve's enhancement program focuses on 3 areas: modifications to the center wing and launch pylon, replacing the horizontal stabilizers, or H-stabs, located at the back of the vehicle, and completing upgrades to our avionics and mechanical systems, as well as strengthening various areas across the ship to reduce the volume of regular inspections. All of these modifications are designed to increase flight cadence as well as overall service life. These 3 work streams on Eve are complex and interdependent, and I'm pleased to share that all 3 are progressing towards completion in the third quarter. The work we are doing on VSS Unity is also progressing well, and the ship is expected to be completed in the third quarter. Unity's enhancements are designed to reduce maintenance needs by reinforcing and upgrading various joints and components located throughout the ship. As with Eve, the result of these efforts will be improved flight frequency, increased time between maintenance periods, and longer service life. Subject to testing and verification, we expect a monthly turnaround time for Unity. As a reminder, we anticipate that VSS Unity will begin flying revenue-generating flights in the fourth quarter later this year. We remain
What do you think
on
about
track
that, guys?
to begin Imagine's commercial service in the first half of 2023. Flight testing is targeted to commence later this year, beginning with a captive carry flight. We will then move to glide flights and finally rocket-powered flights. We anticipate Imagine will begin conducting revenue-generating space flights in the first quarter of 2023, beginning with flying research payloads and then progressing to private astronaut flights alongside VSS Unity later in the year. We expect to see Unity flying monthly following its commercial launch, and we expect Imagine to fly twice per month once it finishes its flight test program. We're very excited at the prospect of delivering this level of capacity from our current ships. We are operating more efficiently, even as we absorb the continuing impacts of the pandemic and related labor disruptions. We implemented a COVID vaccine policy in Q4 of 21 that required all employees to be fully vaccinated or have a legally entitled exemption. We are pleased that 94% of our workforce at the time complied with our policy, and all new hires are also required to be in compliance. This has helped the company minimize the impacts of the virus, although we have experienced elevated sick rates as a result of the Omicron variant. As an added step to mitigate disruptions from near-term labor shortages, we shifted certain non-critical work from the fourth quarter of 21 into 2022. However, we do not expect these changes to impact the completion of our enhancement program or the launch of commercial service later this year. To date, we've not encountered any critical supply chain issues, but we are monitoring this carefully as we recognize that supply chains worldwide are under pressure. We are proactively planning ahead, assessing supplier health, and ordering parts and materials further in advance to help mitigate potential raw material and labor availability issues. I'd like to extend a huge thanks to all of our teammates who have been working incredibly hard under pandemic-related protocols to deliver such great progress. Turning to slide 7. I am very pleased to share that Blair Rich has joined Virgin Galactic as our new President and Chief Business Officer for Commercial and Consumer Operations. In this newly created role, Blair will lead all aspects of our commercial strategy, including sales, marketing, business and product development, communications, operations, and customer experience. Blair brings a unique consumer-centric perspective to our company with an incredible blend of business, digital, and creative experience that she honed working with some of the most iconic brands in the entertainment industry. For the past year, she has served as a consultant and strategic advisor to Virgin Galactic, including guiding the marketing for the Unity 22 flight, which is viewed by tens of millions of people around the world. Blair will continue to play a critically important role in shaping our commercial strategy and enhancing our customer experience ahead of our commercial launch. With Blair's appointment, this rounds out our senior leadership team and ensures that we have deep expertise across all our key areas. Turning to slide 8. Last week, we launched our consumer brand and opened a limited number of spaceflight tickets to the general public. And we plan to have our first 1,000 customers signed up in advance of the launch of our commercial operations later this year. Given the robust response from our spacefarers and early hand raisers, we have approximately 250 seats remaining, and demand through our direct sales channel is strong. As a reminder, we hold a $150,000 deposit against the total cost of $450,000, $25,000 of which is a non-refundable membership fee. Following the closure of our first 1,000 astronaut window, we will build a highly qualified reservation pipeline of future customers through a priority list with a $10,000 deposit required to join. We expect to leverage earned and digital media, as well as word-of-mouth referrals from our ongoing flights, to continuously supply the top of the funnel with new prospects, which we can then efficiently filter using our CRM tools and sales process. Turning to slide 9 and our future astronaut membership.
What do you think about that last slide, guys? Let me
Membership
know.
is included with ticket purchase, which adds additional appeal for customers and highlights our unique experience and service, distinguishing Virgin Galactic's offering in the industry. Future astronaut community members enjoy access to money can't buy experiences, events, trips, and activities around the world, all delivered with trademark Virgin style. We provide opportunities to connect directly with the Virgin Galactic team, offering members deeper knowledge of our aerospace, flight, and engineering programs. Customers also gain exclusive access to Spaceport America, enjoy parabolic flights, centrifuge training, and VIP attendance at launches, to name just a few of the benefits. Trips will include memorable opportunities like the inaugural Space for the Curious Summit that we will be hosting later this year, a multi-day destination experience that's both intellectually engaging and entertaining. Past events have taken members to locations including Antarctica and Idaho to view the solar eclipse and the world-renowned Necker Island. This membership program builds engagement from the minute of purchase through the spaceflight. And we expect the high affinity that comes from these members to translate into repeat visitation, numerous referrals, and extensive lifetime customer value.
If you could afford this, would you buy it?
For our future fleet. While 3 human space flights per month from our current ships is an impressive task, we seek to open space to a much larger audience, and this requires a larger fleet capable of flying at much higher flight rates. In the past several months, we have spent a significant amount of time redesigning our manufacturing approach, and I'd like to outline how this will enable us to scale our operations and maximize efficiencies. Our current ships, Unity, Imagine, and Eve, have primarily been delivered in a fully in-house design, manufacturing, and assembly environment. This approach has been critical during our flight test phase, although it is a relatively slow and expensive process. As we step forward into higher rate commercial service, we will be augmenting our capabilities with strategically selected Tier 1 suppliers to deliver major sub-assemblies in a cost and time-efficient manner. This is particularly important for our Delta-class spaceship and next-generation mothership programs. Our approach takes advantage of the nationwide aerospace ecosystem to tap into talented pre-existing pools of labor and optimize timing of capital expenditures. It also focuses our in-house expertise on design and engineering, final assembly, and fabrication of complex and critical parts that are all important elements of our intellectual property. Overall, we expect that this will provide us with a cost-effective and highly efficient manufacturing model for building out our Delta fleet and future motherships. As I mentioned on our last earnings call, we've established a new engineering, design, and corporate headquarters based in the strong aerospace corridor that runs from El Segundo to San Diego. This serves as our primary hub for R&D and the design of our new vehicles. We are currently focused on evolving the designs of our spaceship and mothership to enable greater flight cadence, as well as to support third-party supply of major sub-assemblies. It's an excellent location for innovation and collaboration, and we continue to ramp up engineering and support team talent at this location. We are also progressing designs and choice of locations for a new final assembly facility for our spaceships. We expect this final assembly facility to be operational in late 2023, and it will eventually employ hundreds of technicians and engineers with production capability of up to 6 spaceships a year. Similar to our approach with the Delta class spaceships, where we focus on the upfront design and engineering as well as final assembly, we are in the late stages of negotiation with preferred suppliers to manufacture the next generation of our motherships.
I'll be right
We
back.
believe that leveraging strategic partners to build these major sub-assemblies will allow us to increase our speed to market and realize meaningful efficiencies without sacrificing quality or performance. Turning to slide 11, I will now turn the call over to Doug for an update on our financials.
Thanks, Michael, and good afternoon, everyone. Before I review the financial results for the quarter and full year, I'd like to begin with a few comments on our broader financial strategy and economic model. We are making good progress in preparing our fleet and laying the groundwork for more efficient operations going forward. To help fund these initiatives, we raised $425 million through a convertible debt offering last month. We timed this capital raise to take advantage of the low interest rate environment ahead of expected rate increases. Furthermore, we entered a separate capped call transaction to effectively establish a 100% conversion premium. In other words, we have hedged our equity dilution risk up to a share price of $20.06. As of the end of January, we had approximately $1.3 billion of available liquidity, which represents the balance as of the end of the fourth quarter, adjusted for the net proceeds from the capital raise. We are well positioned for the investments we're making.
Did I miss a
to drive
slide?
the growth in the business. We continue to see significant demand for our spaceflight services. Our key objectives are to cost effectively expand our fleet and set ourselves up for long-run profitability. We will target investments in key areas to maximize shareholder value while also preserving capital along the way. We plan to invest upfront in NRE, or non-recurring engineering, to optimize our design of the Delta-class ships for efficient manufacturing. This is a major leap forward for our manufacturing capability. Following our NRE investments, we expect that the subsequent ships will be produced in a repeatable, scalable fashion that drives a significant reduction in cost per vehicle relative to our current ships. What this means is that as our final assembly facility ramps up operations, we anticipate it will be capable of cost-effectively producing up to 6 spaceships per year. We expect this will enable a rapid increase in flight capacity that will fully utilize Spaceport America and allow for fast expansion to additional spaceports. Our manufacturing strategy is also geared to leverage the well-established supply chain in the aerospace industry. As Michael mentioned, we plan to internally retain and build upon our IP in design and engineering, while also drawing upon Tier 1 suppliers to provide major subassemblies. Virgin Galactic, in turn, will focus on final assembly and integration. This manufacturing approach streamlines our fleet ramp-up by allowing us to rely on the best practices of existing supplier networks behind our direct suppliers. It will also reduce the total capital expenditure for infrastructure required to scale our fleet. Where possible, we plan to preserve our cash in the near term by deferring cash outflows to better match inflows. Examples of this include leasing versus building or buying, leveraging development incentives where accretive to our business model, and selective use of high-quality partners in the aerospace ecosystem to leverage pre-existing workforce talent, infrastructure, and supply relationships. Turning to slide 12. Unlocking the economic potential of commercial spaceflight requires maximizing vehicle flight rate. As a reminder, following the completion of the current enhancement period, we expect to be able to fly our Unity spaceship on monthly intervals and our Imagine spaceship on 2-week intervals. We plan to supercharge our flight rates with the introduction of Delta-class ships, which we expect to be able to fly on 1-week intervals. With support from the planning and design efforts that have been completed over the past few months, we are now able to provide more visibility into the economic model we are targeting. While we are not providing multi-year guidance, we want to share additional insights about our objectives as we scale the business. Based on our current schedules, we anticipate our Delta-class ships could be ready to conduct revenue payload flights in late 2025 and progress into private astronaut flights in 2026. We are also planning to have next generation motherships available to pair with the Delta-class spaceships as we scale the fleet. Our factory expansion plans are targeting production levels of up to 6 new spaceships per year. Taking into account the expected weekly flight cadence for the Delta-class ships and the resulting growth in revenue from the expanding fleet, we are aiming for positive free cash flow by 2026. We have a range of options for the level of investment we choose to pursue. Given the strong demand we are seeing for space flights, combined with the prior investments in NRE, factory capacity, and other infrastructure, we foresee very favorable economics with the addition of each incremental spaceship to our fleet. Therefore, we expect to lean into the growth trajectory and continue with the expansion of our fleet and the potential addition of multiple spaceports. Our projected operating model reflects a low variable cost structure for individual flights. Our primary variable costs include operating expenses such as a rocket motor and other fuels, as well as lodging and training for the astronauts. Furthermore, we expect to realize economies of scale as we add multiple ships to our fleet, because we anticipate that we will be able to spread our fixed costs over more ships and flights. Examples of our fixed costs are fleet maintenance, the flight crew, and rent. With the planned addition of Delta-class ships to our fleet and the anticipated increase in utilization of the spaceport, adjusted EBITDA margins could be above 30%. Turning to slides 13 and 14, we'll now review our results for the fourth quarter and the full year. Free cash flow was negative $67 million, compared to negative $74 million in the prior year period. This cash outflow was less than our previously shared guidance for the fourth quarter. The lower spend was primarily attributable to labor efficiencies achieved during the quarter and by the shift in certain non-critical path work from the fourth quarter to 2022, both of which resulted in lower spending than previously forecast. As Michael noted, this shift of work and the associated spend is not expected to impact our timing to complete our enhancement program or the launch of commercial service later this year. The shift of work reflects enhanced planning, foresight, and contingency efforts from our team to ensure that we remain on track to deliver on time. Looking at the income statement, we generated revenue of $140,000 in the quarter, primarily driven by astronaut membership fees associated with new ticket sales. GAAP operating expenses for the fourth quarter totaled $81 million, compared to $74 million in the prior year equivalent period. The increase in expenses was primarily due to higher employee costs and non-cash stock-based compensation expenses, as well as the opening of ticket sales. These increases were partially offset by a decrease in contract labor and material costs associated with the development of our spaceflight system. Total non-GAAP operating expenses were $65 million, compared to $60 million in the prior year period. GAAP net loss for the fourth quarter was $81 million, compared to a loss of $104 million in the fourth quarter of 2020. The reduction in net loss was attributable to there no longer being any outstanding warrants, as well as an increase in stock-based compensation expense. Adjusted EBITDA was negative $65 million, compared to negative $60 million in the prior year period. Moving on to our financial results for the full year 2021. We generated total annual revenue of $3.3 million. We received revenue from sponsorship and payload services associated with 2 space flights conducted during the year, as well as revenue earned from completion of certain technical milestones related to the Italian spaceflight agreement. As previously mentioned, we also received revenue for astronaut membership fees associated with new ticket sales. Net loss for fiscal year 2021 was $353 million, compared to a $645 million net loss in fiscal year 2020. Adjusted EBITDA totaled negative $245 million fiscal year 2021, compared to negative $232 million for fiscal year 2020. Our balance sheet remains an area of strength for us. As of December 31st, 2021, we had cash equivalents, and marketable securities of approximately $931 million, which does not reflect our capital raise in January of this year. Looking ahead, and a point to note about how we will be presenting some of our financial information going forward, Beginning with the first quarter of 2022, we will no longer be providing gross margin on our GAAP income statement. Ultimately, the nature of our company is that of a service provider rather than that of a manufacturer.
All right, so let me know.
Manufacture our vehicles. Unlike other aerospace companies, we do not offer our vehicles for sale as standalone products.
We're at 813s, 814s right now.
We produce to operate our space line, and as such, our revenue is derived from space flight services. Within GAAP guidance, in 2022, we are adopting the format of an income statement akin to that of major airlines, hospitality, and service companies. As I said earlier, given our differentiation as the first commercial space line, our margin profile is expected to be much higher than typically seen in those industries. As for our guidance on spending for the first quarter, we are completing the enhancement period on multiple vehicles concurrently, while ramping the development work for our future fleet. We forecast free cash flow for the first quarter of 2022 to be in the range of -$75 to $85 million. We are confident that this work will provide real benefits to our flight rate and service life over the long term, while also optimizing for shareholder returns as we expand the fleet. I'd like to now hand the call back to Michael.
All right, so
Thanks,
we'll see what
Doug.
happens.
Turning to slide 15, I am very pleased with the progress we made during the fourth quarter and the full fiscal year 2021. 2022 is an important year for all of us at Virgin Galactic. Thanks to the dedication of our team, we are on track and on schedule to launch commercial service in the fourth quarter, and we expect to be flying 3 times a month when Imagine joins Unity and passenger service in mid-23. We are well on our way to signing up our first 1,000 astronauts before we launch commercial service, and we are scaling our business in an efficient and methodical way. Coming months will continue to be very busy for us, and I'm looking forward to sharing future updates on our progress. So with that, we'll turn to questions. Operator, we are ready to begin the Q&A portion of the call.
Thank you. If you would like to ask a question, please press star followed by 1 on your telephone keypad. If for any reason you would like to remove that question, please press star followed by 2.
All right, so
Again,
here's the Q&A.
to ask a question, please press star 1. As a reminder, if you're using a speakerphone, please remember to pick up your handset before asking your question.
Bullish or
We'll
bearish,
pause here
guys? Let me know what you
briefly
think about
to allow
this.
questions to generate in queue. The first question is from the line of Oliver Chen with Cowen. Please proceed.
Hi, Michael and Doug. Congrats on the opening sales. Michael, I would love your thoughts on the nature of demand that you've been seeing since you'd opened the sales and how it informs your view of pricing, as well as thinking more broadly about friends and family and all the opportunities you may have ahead. Also, Michael, on the commercial and consumer operations, I know you have new talent in that division. What are your thoughts about key priorities there and how they might work in conjunction with what you're doing in terms of Delta class and the scaling efforts you're making? Thanks a lot.
Thanks, Oliver. So the nature of the demand, as we talked on the last quarter, we had a group of folks who were kind of raised their hand earlier. We called them the space bears, and they're around 1,000 people with a de minimis deposit that they put down. And we had around 300 of those, around 100 of those people, 100 of those 1,000 joined. So that brought us up to about 700 people. And what we just announced this past week, the week that just passed, is we've now opened up sales of the remaining available slots within our first 1,000 future astronauts to the general public. And that's the first time we've been really open up to the general public, leveraging digital channels to do so. We picked up plus or minus around 50 additional reservations before we opened it up to the general public, some that carried in from the space bears, some from some early hand raisers. And so you have, kind of the nature of the demand. First, I'd say the way we're processing our demand is by sharing what we do. The biggest thing was on that Unity 22 flight. That brings a lot of people into kind of our systems and allows us to engage in a conversation. It's a pretty wide group of audience. Some of them are going to be brand fans. Some of them will be people aspiring to the future. But many of them are wanting to fly now. We use a series of
Really good
customer
question.
journey communications to bring them into a group that really is high probability of wanting to fly right away. And then we use a one-on-one sales call around that. We have seen the majority of the seats we're still seen as individual flyers, but we have seen sales across all the products we offer. So individual flyers, couples, either friends or family together, as well as just a full ship purchase. And also, of course, we continue to focus on sales in our research piece. So it's a good mix across the products mix. And the other thing I'd say in the nature of the demand is these are people who, pretty uniformly aren't looking at this as just kind of a quick transactional purchase. This is a life moment for them. And it's why we put so much effort into our kind of membership community. And you mentioned maybe shifting. Blair Rich joined as our President and Chief Business Officer for our Commercial and Consumer Operations Group. At the time when we are flying, part of that group's responsibilities will be actually handling of all the future astronauts and friends and family, managing the astronaut campus where people come. But up front, not only is this group managing the sales, but then immediately bringing people into this future astronaut community and engaging them. And the consistent thing that we have found in these early calls are people recognizing the value of that. This is going to be something that is for their lives. They want to prepare thoughtfully for it. And that's also helped us kind of onboard people and quickly get them excited about the time period ahead, their flight, and the time after.
Okay, and a follow-up, Doug. The guidance is very helpful in cash flow of negative 75 to 85 in Q1. As we think about your leveraging of strategically leveraging suppliers, how might the cash burn evolve in terms of that happening over time? Any puts and takes or thoughts longer term? Thank you.
Sure. Thanks, Oliver. So we guided for one quarter and we didn't guide beyond that, but I can tell you directionally that as you look at the work streams that will be coming in, where we are going through the NRE phase, the design, lining up the supply chain and the factory and so on, we would expect to see some increases in our spending as we build out the fleet, essentially. And the focus there, of course, is the fleet expansion, because that's where we're going to get the great returns on the business. So that's our primary focus for the investment. We are leveraging the supply chain, as you reiterated there. And what that allows us to do is tap into their best practices, their processes, their suppliers, behind them, and also minimize our capital investment. So we pay them for the delivery of sub-assemblies rather than having to invest in the whole factory to do all the parts fabrication ourselves. So that's the type of efficiency we can get by tapping into that supply chain.
Yeah, we'll see what happens with pre-market. They don't make money, however, they get this business
in a favorable way.
Yeah, we'll see, Joey. I don't know, man. Space industry is expensive too.
Thank you. Best regards.
Ron, let's see what the next question is.
Thanks, Oliver. Thanks.
Thank you, Mr. Chen. The next question comes from the line of Kristen Wang with Morgan Stanley. You may proceed.
Hey, good afternoon, guys. Michael, Doug, following up on Oliver's question there on the free cash flow burn once you start investing in Delta, can you provide a little bit more color on that? How much will it cost? And then also, can you provide more color regarding the maturity of the design for Delta and your negotiations with these tier one suppliers? Are they fixed, or is this still currently in the works?
Sure, Christine. Thanks for the question. This is Doug, and I'll take the first one and then hand over to Michael. So regarding the cost, we're at a stage now, with Delta, where we're narrowing the list of suppliers for the sub-assemblies and working through that. And, we're going through the process here in terms of defining that and basically entering the early stages of that process, the negotiation process. So at this stage, it's a little premature to be disclosing the cost per vehicle. So I think you can understand our position where we're at in that life cycle. So it wouldn't be in our best interest to put all of that out there, but that's something we'll be able to share more on in the future as we narrow down the specifics with the supply chain. But Michael, maybe you'd like to talk about the progression on the Delta.
Sure. Just, we have two main parts of our program that we need to scale the fleet. The first is with our motherships that takes us through the first stage, and then the Delta spaceship class itself. The motherships are quite advanced in the discussions that we've had. We don't have something to share today specifically, but I think in the not too far distant future, we'll be coming back there. And that's been, I think, a good set of conversations that reinforces the strategy. There are really quality people out there in the aerospace ecosystem that we can create value for them while also keeping the right things that we do ourselves, namely the design, getting everything set to put out major sub-assemblies, and then we'll do the kind of final assembly, test, quality, safety piece. So the mothership, I'd say, quite advanced in that dialogue there. The Delta class ships, we have been putting our investments and time, we've kind of moved through the basic trade spaces, but we are now kind of getting into really refined requirements ahead of issuing the RFIs and the RFPs. So we've narrowed our list of potential suppliers into a pool. We are well on the way to pick a location for where we will do our final assembly. So we're not quite ready to announce that yet, but we've made great progress there. And as you heard from Doug, we've been able to share some context on, well, it's not appropriate to give multi-year guidance. We do want to share context on our internal planning horizons so people have kind of insight into our own goals and objectives that we're sharing with our teams.
And Christine, I can add a little more too about the cost, the way to think about the cost. So the approach we're taking here is we're investing in the NRE and the digital tools, and you'll often hear about this digital twin approach, which the leading aerospace companies will take. And what this allows us to do with this more advanced modeling and digital tools is we have more predictable parts fabrication, to tolerances, and then the easier manufacturing comes from that. So that allows us to, again, invest up front in that design, which leads to a cost-effective and repeatable, manufacturing approach where we can create copies of this vehicle at a much lower cost than what we've been able to do before. So the advancement in these tools and the modeling capability is really going to help with that cost structure in the future versus how it used to be.
Great. Thank you for all the color, guys. And if I could do one follow-up, I mean, you talked about the return to service of Unity, then Imagine, and, you're building the Delta class. So does this mean that, Inspire is completely off the table and, it's not going to be built at this point?
Yeah, it's we're keeping it right where we were before. It's a good option value for us. We have the ability to finish it and complete it if we so choose. It also has potential use as part of the process to really go through and create a true production model vehicle. So it has potential use in kind of a copper bird scenario as we're working through our avionics. But it's also one that we can come back to. So right now our focus, as you can tell, is really accelerating our work on the Delta class vehicle itself. So we haven't made the final choice on Inspire and just are keeping it kind of in our optionality base there, but our focus is clearly on pushing to the Deltas.
Great. Thank you very much.
Thanks, Christine.
Thank you, Ms. Lerock. The next question comes from the line of Miles Walton with UBS. Please go ahead.
Thanks. Good afternoon. And thanks for the color on the fleet build out. I was curious, as it relates to the 2026 positive cash flow, is the assumptions that you're at that stage still running CapEx pretty aggressively at this 6 per year build rate for the spaceships, and then maybe one?
Yeah, let me know what you guys think.
And so you're,
I think a lot of people are
cash flow
bearish
with that level of CapEx, or is the idea that you're through the CapEx at that point? Thanks.
Sure, I'll take that. Good question, Miles. So we actually have a range of options of how much to lean into that growth. But the scenarios all kind of point to the same general outcome, which is cash flow positive. It's the scenario we end up with here for the company in 2026. regardless of that number of ships. So we can get there with a more moderate number of ships, or we can continue to invest and we still cross over because of the rapid increase in the revenue and the profits that come from that, which starts to far outweigh the ongoing investment. With that said, what we see is at that stage in our life cycle, because we've invested in all this NRE and the factory capacity and the spaceport and everything, there are real benefits to continuing to invest and leaning into that growth trajectory, because the incremental profits from each added vehicle are really very attractive. So the further we go, the further it moves us on that profit curve. So our likely case is to continue to lean into that and invest in additional fleet expansion. And,
Okay.
and I would add,
And there's one other.
at that point, I would also, we would be looking to this next spaceport too. So just continuing that trajectory, we would have, yeah, I saw it coming. So we would have, the factory capacity ready to keep producing spaceships. We would like to leverage that. And, that would be kind of the, after we populate the first spaceport, we'd be looking to continue those efficiencies and then populate the second spaceport and get the economies of scale on that second spaceport.
Okay. And I think you answered that one. So the only other one I had was for the first 1,000 spacefarers, are you through that entire lot by the end of 2026 at this point, based on your plan?
I'm sorry, I'm probably Doug looking at me, I'm looking at Doug. I believe we will, we've probably given you enough data out there to track this. So we do expect our current fleet will be flying 3 times a month as we get going in having Imagine come in the first half of 23. So that gives you kind of a sense of growth until we get our first Delta out. We think the first Delta, again, we're trying to have a balance here, Miles. It's not appropriate to give guidance in multi-year places in the human spaceflight program, but we also want to share some of our internal planning, objectives, horizons. So we believe we are building our own kind of build out and project plan to see the first Delta coming out with research flights, revenue driving research flights at the end of 25, moving into private astronauts in 26. So you can start to do some of that math on where the numbers will play. I would just flag that as you start to then bring in Deltas on a much more accelerated ramp up, and again, with a weekly flight cadence and 6 seats per, we very quickly start to hit bigger numbers there. So anything that's not, I'd say, quite taken up by that 26 period would be done very quickly thereafter.
Okay. Thanks again.
You're welcome.
Thank you, Mr.
All right, guys, so we're going to go
Walker.
ahead and close this down. There might be
Our
another
next
question, but we're
question
just going to
comes
keep
from
this
the line
short
of
and
Greg
sweet today. So
Conrad
let me know what you guys think about
Jeffries.
this one.
Please go ahead.
They're kind of
Good
chopping
evening.
sideways. They're not really doing too much right
Can you
now.
just
And so
maybe
we'll see
talk
what
about
happens
the
here on out.
6-year production for Delta? You talked about that.
Find where this actually is. One second,
what's the timing of making that decision, and what kind of drives peak rate, and how did maybe the economics of the
Good luck. Love you all. We'll see you guys tomorrow. We'll see what happens. Again, vote on the poll right now. Let me know if you're bullish or bearish. And have a good day, guys. We'll see you guys tomorrow. We'll be back bright and early looking at DWAC, PHUN, looking at space, looking at a lot of other stocks this morning. We've had some interesting runs. So as always, hit the subscribe button. We cover all the major earnings releases. And so if you haven't already, hit the subscribe button. We do it all completely live on stream for free right here at Beginner Trading. So good luck. We'll see you guys tomorrow. And have a good day, guys. Sorry, I've been kind of working on some stuff, but we got the earnings call out to you guys. So good luck. We'll see you guys tomorrow.